Talking about a 4.5%, 5% risk on a short.
Arriving at these conclusions, you've got to look at other markets for you to get clues. Welcome to the Trading Desk, where we say money talks. My name is Dave Floyd with Aspen Trading Group, and with me as always, Matt Davio of Red Rock Partners. We have a really good show for you today. With the Olympics coming up in just over a week, we're going to interview local resident Steve Perino, who is also a former U.S. ski team member and now media analyst with Universal Sports. He's going to be talking about the upcoming downhill skiing and giving us his commentary and picks for potential gold medal winners. But as usual, we're going to start off today's show with a look at the markets, and we're going to take a look at our charts and kind of show you where things are heading. You know, Matt, last week we started off with the S&P 500. But I think in the last week, you and I both agreed that we've got one barometer here that we haven't really talked about in probably several months, and that's the price of copper. Yeah. And most people are probably like, copper, you know, why is copper so key? I mean, I know, but let's talk about it.
You know, copper for market participants is always known as Dr. Copper. It leads the markets up and down, and part of the reason is it's used in so much manufacturing, from electronics to manufacturing of you know, all types of hard goods. It's
wires,
wiring, plumbing. It's everywhere. So it's a good leading indicator of economic activity. And again, this is something we've been watching for a while, and as you can see here on the chart, it has started to look broken down for the first time. Again, on the time frame here, we're going back basically to the beginning of the rally. I would bet that's probably
that's the March lows.
The March low. So again, this is a warning sign, a heat, if you will, and you're seeing some of the I know Japanese production was 30% down. U.S. consumption of copper was 20% down year over year. So the reality is starting to hit in. Again, a lot of this pricing action that we've seen, in, as we've been talking about in so many of the markets, was just kind of that oversold reaction kind of working itself off. So now this is a interesting predicament we're in here.
It is, and I think the one thing I want to point out to viewers at home is that arriving at these conclusions, you've got to look at other markets for you to get clues. And now that copper's breaking down, I can go back and look at the Australian dollar over the last 3 months. Everybody was bullish on it because they started to raise interest rates. But you recall, right after they raised them, Australian dollar went sideways, and it's been kind of drifting lower.
As did gold, and gold peaked and we talked about this, gold peaked December 4th. It was the same type of behavior also. You had this behavior that just changed drastically. So,
and of course, copper is a major export from Australia, mainly to China. And on last week's show, we showed the China ETF, which has been broadly moving sideways to slightly down. So again, watching copper prices, I think we've rebounded a little bit this morning, but I think overall it's going to be somewhat bearish.
It's a warning signal. It's clearly a warning signal.
And let's go to the next chart. You'll actually see it a little bit more clearly. And what I've done here is I've overlaid not only the price of copper, but with the S&P 500, and you'll see they're almost perfectly correlated. And at the same time, the minute the copper and the S&Ps have started to break down, the U.S. dollar is rising. So,
and that's the case. You know, when the dollar rises, a lot of people are talking, oh, commodity. You know, we're seeing deflation. Well, you will. You know, because dollar becomes a safer place to put your money. Commodities go up when the dollar goes down, and this is a natural relationship. So you're starting to see this again. Wheat, all the ags, all the meats, the metals, they're all breaking down right now as the dollar has risen. So these were macro views that we were talking about the last 3 months of 2009. That are now coming into vogue, and the masses are starting to recognize them. And now,
well, remember everything we read about gold. Remember Harrods started offering gold bullion bars. We started getting emails from viewers. What about gold? What about gold? And again, that was right when they had that last little liftoff towards the end of the year. And one thing we probably will talk about later in the show, but it's these types of things that investors at home need to be paying attention to. If you have exposure to commodities right now, seriously reconsider it. Maybe pare it back, or maybe even eliminate it altogether. I don't see any real compelling reason to be in commodities at this point in time.
None at all right now. None at all.
Maybe short, though, if clients are inclined to do
that. It's maybe a little late for that, too. You're kind of in that middle range where it's fallen pretty significantly.
Let's go on to the next chart here. And again, this is a well-worn chart that we show all the time. This is the S&P 500, but it, too, is breaking down. My personal opinion, I think in the near term, maybe in the next couple of weeks, I think we could get down towards 1,000.
Yeah. I want to talk about this. We're going to go to a break here real quick at the Trading Desk, and when we come back, we'll talk more about the S&P 500 and broader markets.